The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Welcome to Squawk Box Europe. I'm Karen Cho with Steve Sedgwick and Juliana Tuttlebaan. These are your headlines. Deposed Venezuelan President Nicolas Maduro pleads not guilty to drug trafficking charges in his first court appearance since being captured in a U.S. operation in Caracas.
Meanwhile, President Trump says he is very serious about taking Greenland, despite a warning from Denmark's Prime Minister that it would spell the end of NATO.
If the United States chooses to attack another NATO country militarily, then everything stops.
European stocks line up another day in the green. The benchmark Stoxx 600 hitting a new high in Monday's session, and the Dow notching a fresh record stateside.
Markets certainly proved resilient in the face of the latest geopolitics yesterday, and the latest today. Deposed Venezuelan President Nicolas Maduro and his wife entered not guilty pleas during a court appearance in New York on Monday, following their capture in a U.S. military operation over the weekend. Maduro said he had been kidnapped and was a prisoner of war. Their next court appearance has been set for March 17. The White House is continuing to come under fire from the Democrats after the U.S. operation. Senate Minority Leader Chuck Schumer says any plan for the U.S. to run Venezuela is vague and based on wishful thinking. Trump officials briefed congressional leaders on the operation, which left lawmakers split along party lines over its legality and how the White House plans to move forward.
Well, and how the White House intends to work with oil companies as well, which the president has said would be gleefully willing to get into Venezuela. But are they? Well, the president has floated the possibility of the U.S. government reimbursing energy companies for the rebuilding of Venezuela's oil infrastructure. Speaking to NBC News, Trump said a tremendous amount of money will have to be spent, but firms will be reimbursed, quote, by us or through revenue. Hopes are over potential access to Venezuela's crude reserves saw shares of U.S. oil companies, especially the refiners, Valero at the bottom there, the key one, jump in yesterday's session. The European peers didn't share the same optimism, with the likes of Shell and BP ending the day lower. Well, I would like to say we have more clarity on the U.S. intentions, on what is going on in Venezuela, and what is going on in terms of the ramifications from the extraordinary events of the weekend, 24 hours after we started talking about this yesterday. I think I can fairly categorically say we have zero more clarity. We have no idea what the administration tends to do with Venezuela, what their next stage of the operation is. We have zero clue of who they'll be dealing with in the medium term as well. We have a pretty good clue that the US does not really care about regime change in Venezuela, and the fact they're, I think, looking to work with the newly appointed president, Rodriguez, and aren't looking for wholesale democratic change in Venezuela. We have zero clue on what the US oil majors really want to do with Venezuela, who's going to pay for this as well, what the Venezuelan people and their aspirations are and how they're going to be factored in as well. We do have a clue, though, about the response of Iran, Russia and China, and they are, on one hand, probably quite excited about what it means for their spheres of influence and where they want to be, but also, of course, quite a strong backlash against the US. So I think the mud and the opacity remains extraordinary 24 hours on.
And we heard from Maduro himself yesterday, the claims that he was innocent, that he's not guilty, he was kidnapped, and of course it feels like we're going to see more airtime for him at some stage given the legal case that's unravelling from here. In terms of some of the points around Trump touching on elections, he did lean into this, saying you have to fix the country first, you can't have an election, there's no way the people could even vote, so suggesting perhaps there is a timeline, and doesn't sound like it's going to be quick if you look at that assessment.
I'll ask you a quick question.
Yes, of course.
On the back of Trump, Do you think he means fix the country first or fix the country's oil industry first?
Well, that's right. I mean, is one leading to do the other? I mean, often there's a commercial value in the sense where you get the money pouring into the country, then suddenly you have some wealth that you can work with in terms of fixing the rest of the country as well. So some priority, I think, when it comes to the oil. But the line, I think, that was fascinating too was that the US may help with the reconstruction here. Is it the US government? Is it the US underwriting any reconstruction here, quite separate from what we were talking about yesterday, where it's the oil companies themselves making those investments? That's quite different. Who's on the hook here? Is it US taxpayers or is it shareholders of American oil companies? That's quite a significant distinction.
It's interesting that you note it as a significant distinction, because I think yesterday one of the big questions we were asking ourselves was it premature that these oil stocks, the share price in these oil companies were surging so early on when we had no confirmation that they were planning to invest, and we were debating whether there was things happening behind the scenes. So I don't know if it is that much of a surprise to hear President Trump talking about these oil companies potentially getting reimbursed for investing in Venezuela. That clearly was the play and the gamble that investors were making yesterday by investing in those companies. There might be an incentive there.
Every single one of the senior Venezuelans who were in place before the extraction of Maduro at the weekend, everyone including interior ministers, defense ministers, everyone who is accused of being part of some narco exporting, cocaine exporting gang are still in place. So the original rationale for Trump going in was to bring to justice the leader of a cocaine exporting ring that was bringing to you and bring them to justice. But now it looks like he wants to deal with everyone else who is accused of repression, murder, illegal kidnappings within the country as well, illegal holding of protesters, of opposition, what have you. Every single one of these people who are part of this gang are still in place, and the president wants to deal with them. So let's just strip this back. This is, I think, very obvious about energy. This is nothing to do with actually bringing to justice a whole ring of cocaine dealers or exporters into the US. Was
it just Trump himself? Because one of the lines was that a recent US intelligence assessment determined that Rodriguez would be the best positioned person to lead the government. So was it advice taken by institutions that Trump ended up with his decision, to the point around other decisions that have been made in the Middle East before where there's been a vacuum of power? This seems quite a different decision by the United States. And was it assessment from the likes of the CIA and others, for instance?
I don't know about that. What I do know is Venezuela is broken top down, bottom up. Every institution would need rebuilding, not just. So if you rebuild the oil industry without rebuilding the infrastructure, the civil society, the institutions, the legal system, the process of government within the country, then you are setting your oil majors up for a potentially disastrous situation if US troops are on the ground. And there's no intention that they're going to be there medium to long term at all. That's not how Trump is working. So if you rebuild one part of the infrastructure without rebuilding the rest, what are you ending up with?
Well, that's right. You still might have problems. I think the other point that needs to be made here, the names that you mentioned around the Interior Minister and the Defense Minister, there were questions yesterday as to whether the Americans might have to be more involved, whether what has happened, what's transpired so far would be sort of very subtle operation, or whether there'd be more strikes, more required from the American position. But you've got to ask, given what's happened to Maduro, the very heavy-handed tactics from the Americans, would anyone else be willing to put their head up and push back against the Americans here? Or would it have to be very covert operations by major players there, a sort of undercover network to try and thwart any American activity on the ground? You'd think that most would be somewhat reluctant now to try and push back from Rodriguez to, of course, the two other ministers.
Well, one thing is for sure, all of these things that we're talking about will take some time. In terms of the market reaction, we already showed you a glimpse of how some of the U.S. oil majors fared yesterday. Decent gains across that space for the market overall. The Dow powering on to a fresh record high. S&P 500 also closing the session higher, and the tech-heavy NASDAQ gaining some ground yesterday. In terms of the Asian trade overnight, also gains there, an extension of the rally that we saw in the previous session. Gains across the board. Nikkei 225 adding a further 1.3%. The Hang Seng over in Hong Kong bouncing 1.5%. Shanghai Composite adding another 1.4%. And the Kospi over in Korea also trading higher. So equity markets kicking off 2026 on the front foot. In terms of European markets, we also had a strong advance yesterday with the Stoxx 600 adding a 1%, led by strong gains in the Xetra DAX. A lot of bidding for those cyclical companies in yesterday's trade, and we are looking at more gains this morning. That's what futures indicate at this stage. Now, in terms of the Wall Street Open today, we're also looking at a continuation of yesterday's rally. That's the early picture. Now, all eyes are on Friday's non-farm payrolls data for clues on the Federal Reserve's rate-cutting path this year. Speaking with CNBC yesterday, Minneapolis Fed Reserve President Neel Kashkari said that he thinks the central bank is nearing the point where it should stop lowering interest rates.
Over the last couple of years, we kept thinking the economy is going to slow down, and the economy has proven to be far more resilient than I had expected. That tells me, well, monetary policy must not be putting that much downward pressure on the economy. And so my guess is we're pretty close to neutral right now. And we just need to get more data to see which is the bigger force. Is it inflation or is it the labor market? And then we can move from a neutral stance, whatever direction is necessary.
Mohit Kumar joins us now, chief economist, strategist for Europe at Jefferies. Good morning. Very great to see you this morning. Over the last day, 2 days, I guess, since markets have really been open in 2026, it feels like we are kicking things off on a really bullish note, a very stark contrast to a lot of the debate that was taking place in December, whether we were seeing the bursting of the AI bubble and whether we were, tucking in for a volatile 2026. It feels like sentiment is actually quite positive right now. Is that premature, or do you think that these first two trading days of the year are an indication of what's to come?
I would not say it's premature. So we are bullish. We are long equities, we are long credit, we are long EM. And the underlying reason for bullishness is basically two factors. One, we heard from Kashkari as well, but Fed is still on an easing path or towards an easing path in an economy which is doing fine. It's not slowing down. And second, in my mind, more important, global liquidity is rising. You look at every major economy, they're doing fiscal expansion. The big beautiful bill in the US, EU doing fiscal expansion. China, we think they will do fiscal expansion. India, Japan. There is more money being pumped into the system, and that's very positive for risky assets.
What gives you the confidence to say that the Fed is still on an easing path? Because it does feel like there's still a huge amount of uncertainty when it comes to the underlying U.S. economy, and we're just starting to get the data coming through after the government shutdown.
So our base case is still 2 more rate cuts from the Fed. We potentially get the next rate cut in March. And then we know that there is a bit of pressure on the Fed to shift towards the dovish direction. We could have the new Fed chair who is likely to be more dovish. And that's why we think 1 more rate cut from the new Fed chair. So that takes us, whether it's neutral, what neutral is, who knows, but we think it's probably close to 3 or 325. So slightly different from what Kashkari was saying, but the direction of travel is still towards lower rates. It may not be a lot, it could be 50 basis points or 25, but the direction of travel is still supportive.
The backdrop of lower rates can go a long way. We've seen that many times over the years, that very supportive credit environment. What does that mean, though, for the allocation of assets? You've seen AI, of course, be a big theme in 2025. That still seems to be in place this year. You've seen appetite for semiconductors, for instance. Where would you be placing your bets in the equity market in 2026 if you want to capture the biggest returns?
So we are still positive on tech. We are still positive on AI. The changes we have done to our portfolio is we have taken a step back from the big names because we think the next step is a diversification, a broadening of the AI rally. So we are still long US tech, but other areas that we are bullish, we are long financials because we think deregulation will be another theme. We are very bullish on EM because if you have the Fed easing, dollar potentially weakening, that's very positive for EM. We are adding to China tech. We are adding to certain selected sectors in Europe. And I think events of the last 2 days support our view that defense should be an area that should be supported. Metals, we are very positive, whether it be gold or copper, that's another area we are very bullish. So we have lots of pockets where we have been diversifying away from just an AI theme.
Could something go wrong with the dollar this year? I mean, to the point around your expectations for some further weakness in the US dollar, that wasn't the case yesterday as we were looking at some of the geopolitics. Could there be a problem with the narrative of a weaker dollar in 26?
I always say when we trade dollar, it's against what? Because FX is a relative value play. So if you are short dollar, it's against what? I actually think euro or GBP is not the right currency to be short dollar against, because Europe has its own problems. It's not that we are going to grow fantastically. GBP, again, very difficult to say. So our view of a weaker dollar is twofold. One is versus commodities, and that's the gold view, because if central banks want to move away from the dollar, gold is the biggest beneficiary. So we're very bullish. The second is really versus Asian currencies. And that's where we see a lot of potential, whether it be China or Korea or Taiwan. That's where we would see dollar weakening against.
Mohit, fantastic. I feel very excited about this year because I am the only person who still seems cautious on the market. Looking at all the analysts, well, maybe it's just us actually here, that's the traditional journalist role. In fact, already this year I've seen a comment in the Financial Times that says it's just the media that's bearish, everyone else is bullish, which I love. I love being in that place, and that's great. But your first answer, and I'll go back to the first word. I'm very excited, well, not excited, my words, not yours, about the fiscal expansion. I think words to that effect anyway as well. Which country is it that's expanding fiscally, can afford to do so, apart from Germany? Is it? I'll just give you a few questions. Is it Japan at 237% debt to GDP? Is it Italy at 135%? US at 121? France at 113? Or the UK at 101? Which of these countries can afford to fiscally expand?
So to answer your question, in Europe, probably none, apart from Germany.
Yeah.
But we also have this NATO target. We have to reach this 3.5% to 5% of GDP defense spending by 2035. So our base
that's
case...
just Spanish, of course, which you have social costs, which outweigh the importance of defending yourself.
Agreed. But what we should have, and this is our view, is we will see a defense spending funded by EU. So this is like the recovery program.
So the magic hat where you pull a rabbit out where the money doesn't exist. I love it. Carry on.
So our base case is, if you look at the money that is being spent, so Germany has committed 160 billion for defense.
Yeah.
They have talked about another 500 billion over a 12-year period for infrastructure.
Yeah.
We think another 400 to 450 billion will come from EU as a defense project.
Nice.
So this is like the recovery fund, which already issues 100 to 150 billion a year, that can be reframed into a rearm Europe or a defense Europe. So that's where we see another, let's say, $500 billion coming from. But in terms of money, we have close to $1 trillion being spent over the next 5 years. Yeah. For Europe, it's a lot of money.
Yeah, it's great.
Then look at other countries. In US, we have the big, beautiful bill. And agreed, it prevents a fiscal cliff, but on a delta basis, it's still fiscally positive. Yeah. Japan, we have Abenomics number 2.
Okay, great. So there's money coming out. Abenomics, a big, beautiful bill, EU magicking out of a hat because it's commission borrowing it rather than individual states. Love it, love it, love it, love it, love it. Why on earth should I own the bond markets on the back of that? And surely, everyone seems to have forgotten that actually before we called it the Great Financial Crisis, it was actually called the European debt or sovereign debt crisis. And I did my tour. It was great. I went from Iceland. I had a fun time in Nicosia. I was having a right laugh in Syntagma Square. It was great. The debt levels across the world are way higher than they were when I was on my tour.
Totally agree. And I am with you that I would not own the long end of the curve. But I'm very happy to own the front end of the curve. So if you think about the curve, 30-year bonds, I don't like. Almost anywhere I don't like. But the 3 to 5 year sector, I'm very happy to own because that's governed a lot by central banks, a lot by regulation. And that's where we put our money in.
Sorry, what? Everyone, we've got a load of time. Got 3 hours. Why is the sovereign debt crisis of 2008 that created a tumult in the equity market then not going to have similar ramifications this time? If you don't like long end paper this time round, and governments will have to come in to support it through some form of QE, obviously, because that's what always happens. Why will that not create risk asset problems in 2026?
It always depends on the level of yields. So let's take US as an example. Are we going to 5.5%, 6% on 30-year? Absolutely not. US has so many tools to prevent a Liz Truss moment or a massive rise in yields. Changes to SLR, changes to how much banks can hold treasuries, Treasury's buyback operations. They can effectively control a massive sell-off at the long end.
Love a doom loop. Juliana, one quick question, because I did nick your one.
Just coming back to your, one of the key pillars of your thesis that it's going to be a supportive environment for risk assets this year, the fact that the Fed is going to ease, at least, cut one more time. Are you not worried about the inflation picture? I mean, clearly that is the central debate for the Fed right now, whether we should be more concerned about inflation picking up or the weakening labor market. And it kind of feels like as we enter 2026, the whole tariff debate has been brushed aside.
I would not brush it aside. But when we look at the inflation picture, short term, absolutely we see inflation moving higher. But from a Fed's perspective, they can argue it's transitory. I know this word is not very popular, but basically, if you think about something cost 100, I put 20% tariffs, that's 20% inflation in year one. In year two, still cost 120, that's 0% inflation. So Fed can argue it's one-off, it's transitory, and still continue on a semi-easing path. And that's where I think the Fed bias will be.
God, I love this market. You can have your cake and eat it all year. Brilliant. Mohit, love the conversation. Thank you very much indeed. You can have a great growing economy and lower interest rates. What more do you want, you lot? Absolutely nothing. You love the market. Mohit Kumar, thank you, sir. Chief Economist and Strategist at Jefferies. Love your copy. Thank you, sir. Coming up on the show, Denmark's Prime Minister warns of the end of NATO as President Donald Trump doubles down on his desire to control Greenland. Plus, Nvidia touting a slew of AI offerings in Las Vegas. We'll have the details, and we're going to have more on the latest from Venezuela and the potential global implications, including on Taiwan with Sean Rain, who is the founder of China Market Research Group. That conversation coming up at 9 London time. Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick. Here's the CEO of the London Stock Exchange Group, Julia Hoggett.
There is no justification whatsoever for not doing the right thing, even if the right thing is hard to do. Which also means that if the context changes or the information changes, it is absolutely fine to also change your mind.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this.
To Squawk Box Europe, the U.S. operation to capture Nicolas Maduro has caused disquiet around the world, but perhaps even more so has President Trump's assertion that the U.S. will run Venezuela. Speaking to CNBC this morning, Eurasia Group President and founder Ian Bremer gave his take.
What he meant is that the United States has so much military capability and willingness to use it that the Venezuelan government is going to have to listen to the U.S. or else. This is not regime change, right? This is regime roulette. They spun the wheel. They got rid of Maduro. Now they've got somebody new and someone who's part of the old regime with all of the old regime still intact, that the U.S. has no history of working with or relationships with. There's reason to believe they're pragmatic. But they're going to keep the military, the U.S. military, offshore, and they're threatening them very clearly.
Meanwhile, President Trump has doubled down on his goal to take control of Greenland, telling NBC News that, quote, we need it for national security right now. He's not given a time frame for any potential action. Danish Prime Minister Mette Frederiksen said that any move to annex the territory would see the end of NATO.
I believe that the US president should be taken seriously when he says that he wants Greenland. But I also want to make it clear that if the United States chooses to attack another NATO country militarily, then everything stops. That is, including our NATO, and thus the security that has been provided since the end of the Second World War.
Greenland Prime Minister Jens Frederik Nielsen said he wanted to work with the U.S., but played down the chances of the Arctic island becoming part of America.
Our country is not really the right one to compare with Venezuela. We are a country that is democratic and has been democratic for many, many years. And if we look at the whole picture, I can understand that some people are concerned. But the cooperation that is being strengthened, the cooperation we are pursuing right now, means that we want to create or re-establish the cooperation we previously had with the United States, especially the good cooperation we have had to restore that between us. The situation is not such that the United States can simply conquer Greenland.
Well, on the one hand, it feels like the world is now, waiting and very anxious about anything President Trump says and worried that they need to take it seriously. And when it comes to Greenland, he's made these threats before, but now he's making these threats on the heels of having gone in to Venezuela and captured the president. On the other hand, as the Danish leader and the Greenland's prime minister said, this is a very different situation, given that Greenland, given that Denmark anyway, is an ally of the United States.
It is a different situation. I think what's interesting this week is that you've seen how the US will deal now with a so-called foe. How will it deal with an ally? And this is where Greenland comes in. One of the comments made from the Danish Prime Minister was the implications for NATO, saying that in the event of a US invasion of the territory, everything stops, including NATO. I mean, is it that significant in terms of what we're talking about for this year, of how the alliance holds together? Is that how they really see it? What about others who've already commented? I mean, Keir Starmer here in the UK also throwing support behind the Danes. What position would that leave the UK in if there were some annexation? I think the comments, the spin here too from the President was that it's important for the security of Europe now as well, not just the United States. Is it important for Europe? Is that how the Europeans really see the situation around Greenland? I would beg to differ. I don't think they do.
So it's just crazy what's going on so many levels, and having kind of spent a bit of time looking at this over the years and what have you, is like, let's just go back to basics. Which nation, Denmark or the United States, had 10,000 troops in Greenland in the 50s and 60s? Was it A, Denmark? Was it B, a Greenland militia? Or was it 3, the United States? And we all know the answer because I wouldn't have asked otherwise. It's the United States. Well done, you got that one. So the US had thousands and thousands of troops on. They can put thousands and thousands back on Greenland if they want to defend NATO territory. Second point, is the United States looking to make Venezuela the 51st state or Greenland? Again, easy question. It's Greenland, potentially, not Venezuela. Why is the US not doing Venezuela, but it would want, because it wants the resources out of Venezuela? I think we know now they're not looking for democratic change, or this administration is. What it really wants out of Venezuela is the natural resources. So why can the US not do the same as it wants to do with Venezuela and work with the Greenland government and work with the Danish to extract the resources it wants? So none of this makes sense. If you want to extract resources from this area, I'm sure they would welcome the investment from US companies. I'm sure they would welcome the defence force being built up from a couple of hundred now to the 10,000 it was in the 50s as well, if that's what the Americans want to do as well. So it doesn't make sense to me that in one part of the world you want the resources but not the political responsibility, but in another part of the world you want the political responsibility and the resources of an ally.
You forced me into lateral thinking now when you've suggested the positioning of more troops there, because naturally if you think about resources and the requirement for American troops at this point, given the geopolitics, that would seem quite heavy-handed. So would it be the wrapper of putting some sort of American flag on the ground that would mean you wouldn't have to put the boots there, because it would naturally provide some protection for Greenland without the troops required to be there
anyway? Because it's called Article 5.
But clearly the Russians, clearly the Chinese want access to these minerals. It's now becoming more and more pressing as you see the thirst for natural resources. And as Arctic shipping lanes move open with less ice, it means it's also a ready area for attack, not just across certain weeks or months of the year, but probably more broadly. So protection would have to go up naturally. Is that a protection the Americans really truly want to offer without having some sort of flag in the ground? I'm not arguing for the Americans, I'm just saying thinking laterally.
But the defence argument, again, falls foul of the fact that Denmark, therefore the region of Greenland, is part of NATO.
Yes, so you think it would apply anyway?
No, I don't think it would. It would. It's 100%. If you attack one part of sovereign NATO territory, then it is attack on all. It's there. And Trump, reinvigorated this when he was at the most recent summits, which we were at.
Well, to that point, today European leaders are meeting in Paris to the coalition of the willing to discuss the Ukraine situation. And to your point about when you attack one NATO country, you attack them all, the Europeans are in a position right now where they don't want anything to derail the potential Ukraine peace process. So they've been pretty quiet about, other than what we've heard from the Danish Prime Minister, November.
Oh, no, because it can't be, because it has to be January, because I thought that this whole deal was going to be done by Thanksgiving. Sorry, have I missed something? Have I gone to sleep for 3-4 weeks and I've missed Thanksgiving?
No, it's still hanging in the balance.
Because I thought the US administration said this deal had to be signed by Thanksgiving.
Well, clearly there is still massive support from the Europeans to continue the process. And last we heard Zelensky declaring that the Ukraine and the United States were 90% of the way there. Again, to your point, that was at the end of last year, and we are not there yet. But clearly the threats against Greenland are complicating the relationship between the U.S. and the Europeans at a time when they're trying to achieve peace in Ukraine.
What you highlight, though, is a hot conflict. Nobody wants a hot conflict that then has to be solved in Greenland. So I think in terms of your point that Steve made, that if you do have this wrapper of NATO, that it has to be effective, it has to work. You don't want someone sort of trying it on, trying to see whether NATO is truly going to come to the rescue and sail in here. So I think that's what needs to be solved in this situation, as to whether if Russia or China were to make moves on Greenland, whether it be absolutely clear that it would trigger a war.
And for more on what Trump's latest move in Venezuela could mean for Taiwan, actually, we've got a great interview coming up. The founder of China Market Research Group, Sean Rain. That's coming up at 9 London time.
European markets yesterday, we got to 10K on the FTSE, a fresh record. The DAX set fresh records this year as well. As we gear up for trade, it looks like further January momentum. And let's face it was absent in December for most of the trading month. They're very muted ranges. It looks as though we've got that January bounce here in Europe.